What's your view on international equities right now as well? We've spoken a lot about what's happening inside the United States. You and I are sitting here in the Gulf, obviously monitoring the deal flow and equities here as well. And of course, looking at what's happening in Asia over the past couple of weeks too, this outperformance in Japan post-election plus big moves in South Korea. What do you like? What do you dislike?
We're overweight non-U.S. markets. We like the value sector, the small and mid caps outside the U.S. If you look at the fundamentals of the small and mid caps, just broadly speaking, Europe, Japan, emerging markets, their fundamentals are better than their counterparts in small and mid caps in the U.S. We like those positions. It doesn't mean we're calling for the end of U.S. exceptionalism. I think that in the long run, the U.S. economy will remain quite dynamic and an engine of growth in people's investment portfolios. But if we look out 6 to 12 months, you still have better valuations and finally an inflection point in the fundamentals of different sectors, different areas. We also like emerging markets. And Dan, I'm here in the Gulf this week, and I can feel the dynamism of this region and what's going on here, and the younger population growth. The cranes are up everywhere is building everything, and there's growth and relatively low inflation. So there are lots of places in the world to invest outside the U.S. right now.
So our job for viewers watching outside of the United States is to explain that trend and to interpret how to trade it, right? Where is the opportunity specifically? So what would you say is your highest conviction bet or trade outside of the United States right now?
It's probably European banks. We like, for example, they've rallied tremendously, and they're still trading at a valuation discount relative to U.S. banks. There you have an advantage that you didn't have for a long time for banks where rates were negative in Europe. And so you're looking at 1.5 times book value, and then you look at U.S. banks like J.P. Morgan, Goldman Sachs, 2.5, 2.7 times book value. So we think there's still a good relative valuation opportunity there. We also like sectors outside the U.S. like technology, right? And as well as just talk about the picks and shovels build out of AI, where some of that is also happening outside the U.S. In the end, Dan, I'm an asset allocator, so I always tell my colleagues, don't listen to me when I talk about stocks, because my specialty is looking at the world from the top down. But at our firm, we have over 300 stock analysts, and they're finding opportunities from the bottom up, from a fundamental perspective, in a lot of different countries, in emerging markets, in South America, in the region here, in Europe. So I think it's an opportunity-rich set. We have more than half the assets that are outside the U.S. So investors are going back to this, to broader diversification. I think that's a good thing.
What's the opportunity here in the region specifically?
I think you have a lot of opportunities both on the debt side and on the equity side. You have, 4 or 5% GDP growth, depending on which area you look at. And you have very stable inflation, strong employment. So if you're selective, I think there are plenty of opportunities across capital markets. I know that's a very general answer. I'm not the person who talks about specific companies, specific stocks, but you get the idea that there's real dynamism here in this region.